Welcome to Inside Asia, a podcast by SEB where we try to connect the dots on what's going on in Asian economies and financial markets. My name is Sean Yokota, Head of Markets for Asia at SEB. We are recording this on November 18th in the afternoon in Singapore. My co-host Frederick Canal is on assignment, so I'll be doing this solo. We are going to talk today about gold, gold, gold. It's up over 50% this year versus something like the euro dollar. It's up 12% versus the dollar. And we want to see how Asia plays a role in the gold market. So, will the Silk Road be paved in gold going forward? We're delighted to have my friend based in Singapore, Shaokai Fan, from the World Gold Council, where he is the head of Asia Pacific and global head of central banks. Hi, Shaokai.
Hi, Sean. Thanks for having me.
Usually, we start the show with some things we're seeing personally in Asia. And last month, I was traveling in China and Shanghai, and then a couple weeks ago, I was in Korea, in Seoul, and I had to get Shaokai today on this because I got so many questions on gold, which is very unusual. And often when prices move up or down substantially, China often gets blamed for that move, whether it's they're buying a lot or selling a lot. It's the same thing with like U.S. Treasuries. So we wanted today to either dispel the myth or maybe it is true. So before we start, Shoka, as a teaser, we've had this pretty big gold rush this year. Is it due to Asia and China? And if you can just answer in one word, yes, no, or sort of, just as a teaser.
Well, sort of is two words, so I will take sort of, unfortunately, because I'll have to go into a little bit more detail, but yes, definitely sort of.
So, Shokai, just when we start, can you just give us a brief intro on the World Gold Council and what you do there as head of Asia Pacific and of the global central banks?
Of course, the World Gold Council is a nonprofit market development organization that's focused on trying to enhance and improve the gold market by providing data, analysis, information, basically anything anyone wants to find out about gold, we're here to provide that. My role as the global head of central banks means I talk to virtually every central bank around the world on gold as a reserve asset or other aspects that intersect between gold and central banking. And as the head of Asia Pacific ex China, I'm mostly in charge of market development efforts, trying to expand the gold market and connect those who want gold in our region to gold itself.
So my guess is you've been pretty busy this year.
That would be quite an understatement. I've been barely in Singapore, basically living and sleeping on airplanes.
And then just on a personal note, so you are from New Jersey in the
I
U.S.
am,
and
yeah.
in Singapore for how long? Or Asia?
11 years now in Singapore. Asia for around 20 years, actually.
New Jersey, you got Bruce Springsteen, Martha Stewart, Thomas Edison, very bright people coming out of
Thank you for highlighting the positives of New Jersey. People
there.
often gravitate toward the negatives, but we have many, many things to be proud of.
So to kick things off, we wanted to kind of start and create a basic framework on how to think about gold. And with many things, I think it's easy just to start with what does the supply look like? What does the demand look like? So if we first start on the supply side, on gold, I think it's a bit more easier to follow because it's mostly mining and recycling. So can you just kind of talk about what the supply situation looks like and what's it look like going forward?
Yeah, in a nutshell, of course, gold supply comes from mostly two sources: mining, which is about 75% of supply, and recycling, which is 25%. Recycling is simply when people sell back old jewelry, for instance, back into the supply chain, or maybe they sell their iPhone back and the gold components are recovered from scrap. On the mining side, gold is unique among many different commodities because it's actually mined on every inhabited continent on Earth, so every continent except Antarctica. Mining supply is relatively geographically diverse, although there are some countries that have more gold supply than others. In general, we've been seeing newly mined gold supply rising at about a 2 to 3% year on year pace. Even with these very strong gold prices, you simply can't just flip a switch and have more gold coming out of these mines. They're very complex operations. So we do see mine supply growing, but of course not growing quite as fast as demand. On the recycling side, that part of the gold supply chain typically is a little bit more price sensitive, and when prices are higher, you'd expect recycling volumes to increase as well, which they have, but they actually haven't increased by nearly as much as the price would predict. Whereas in previous cycles, when the gold price was high, we saw booms in recycling volumes because people wanted to cash in. And while we are seeing that to a smaller extent, for the most part, gold recycling has been somewhat subdued as people may be just expecting higher gold prices or have no immediate need to sell the gold for cash right now. So overall, gold supply is actually relatively subdued in terms of volume compared to the large amounts of new demand that we're seeing.
And then if we look at the mining through the Asia's lens, I see that the big ones are China, if we include Australia, and maybe Indonesia. And are they playing a bigger role in generating supply for the market?
Yeah, definitely. We've seen, more and more gold mining in the Asia Pacific region. China is actually the largest gold producer in the world, but China's gold consumption is larger than its gold production, so it still needs to import gold to meet domestic demand. In Southeast Asia, Indonesia is a big gold producing country, the Philippines as well, and of course Australia is a major gold producing country. I think gold recently became Australia's second largest export by value, which has been quite a good boon for their economy.
And then you kind of mentioned it before, but is it like the rare earths where you can find it in many places? It's just a matter of time and price and environmental impact to get it out of the ground and into market.
So gold is rare, but not quite as rare as rare earths. But as with every commodity, the higher the price, the more economical it is to start extracting gold from harder to reach places. So existing mines, for instance, the deeper they go, the more costly it is to extract. It gets hotter and hotter down there. But with prices being where they are, it does incentivize miners to exploit existing mines more, to maybe to get to harder to reach gold as well, and of course to pick up the pace for trying to find new discoveries too.
So how many years would it take to if you start now to get something
Yeah,
working?
on average,
Mhm.
it actually takes quite a while. I'd say from the moment that you identify that there's gold on a certain piece of land to the moment where you can start extracting the first ounce of gold from that land, maybe upwards of 10 years to get,
Okay. Wow.
environmental studies and permits in place, and of course building the infrastructure to get to where the gold is because it's often in the middle of nowhere.
And Shaokai, how much gold is there in the world altogether?
Actually, much less than people think. So, all the gold that's ever been mined in human history, if you stack it up and form it into a cube, that cube would be basically 22 meters by 22 by 22, which is roughly the size of the space under the very bottom tier of the Eiffel Tower. It could fit very easily into that. So, across the thousands of years that humans have been digging gold out of the ground, that's all the gold that we have. It could fit roughly into 3 to 4 Olympic-sized swimming pools as well.
Wow. Okay. No wonder it's expensive. There aren't
Yeah,
that
for
much
sure.
around it. And then yes, so it seems like supply is pretty limited, inelastic. So maybe the delta changes are more on the demand side of what we're going to see.
Yeah, demand definitely moves a little bit faster than supply for gold. And of course, the past few years, demand has really been extraordinary, but also shifting as well.
And then I think you guys produced a report for the third quarter, and I was somewhat surprised that in volume terms, demand is up about 3% year over year, and but by value, it's up 44%. Like usually when something price goes up, usually you tend to buy less of it, but in gold's case, that's not the case.
It's not the case across many categories of gold. It actually is the case for some. So maybe this is actually a good point for us to review what the different factors of demand are for the gold market. Basically, we categorize gold demand across four different major centers of demand. The first is actually gold jewelry, which is roughly 33% of overall demand for gold. And that's the area where you see a little bit more of a connection between gold price rises and demand for physical gold. When the price is higher, typically gold jewelry volumes start to drop. Another 7% of gold demand is gold's use as a technological or industrial input, so uses in circuitry, for instance, other types of manufacturing. And that's an important part of gold demand, although relatively small compared to the other components. Nowadays, close to 40% of gold demand is investment for gold. So that's either gold bars and coins bought by individuals, also gold backed ETFs, for instance. And that's been one of the hottest and most fastest growing parts of the gold market, especially in recent years, because we've really seen a lot of investors being drawn in to investing in gold. And the final part of the gold market, roughly 20 or 21% of demand, is central bank gold buying, the official sector, I should say. That's also been a major growth area for the gold market in recent years.
And I'm glad you kind of divided that up. So if we kind of start with the first one on the jewelry side, so my guess is that then this is where Asia plays a pretty big role in demand, such as like the Indian jewelry market. Can you explain
Yeah,
a bit more about that?
absolutely. Absolutely. China and India are the largest and second largest consumer markets for gold in the world. So they both consume a lot of jewelry. But of course, outside of these two major markets, across our region in the Asia Pacific, many other countries are very large consumers of gold jewelry. Thailand, for instance, Indonesia, Vietnam, they all buy quite a bit. But like I was alluding to earlier, when the price is higher, we typically see the volume of gold jewelry being bought decline, which has been the case throughout most of this year and across almost every geography as well. However, although the volume has declined, the value of the gold jewelry being bought has stayed somewhat more robust, meaning that the demand is still out there, but people can afford to buy less gold jewelry because of the very high gold price.
And then the second one you mentioned with technology, whether it's electronics or industrial, I'm a bit more curious with this. Everyone's talking about AI boom and all the servers and technology that needs to get built. Is that starting to play a role in the demand?
Yeah, gold use as an industrial input has actually been positively affected by the boom in artificial intelligence. Over a longer period, gold's use in this area has actually been in a decline because of the higher prices of gold, usually creating a substitution effect for manufacturers who want to choose a different material to work with. But with the boom in AI technology, that's actually led to a bit of a resurgence in the demand for gold as an industrial input because it's used so extensively in circuitry.
And then the other part you mentioned, if we talk about investments, if we can first just start on this ETF that's been growing, is that also a global phenomenon, and are Asians playing a part in that as well?
Absolutely. Inflows into gold ETFs this year have been exceptionally strong. We had actually a couple of record breaking months overall. And that's been a phenomenon we've seen across many, many different geographies, Asia included. I'd say the vast majority of inflows have been coming from Western markets, but East Asian markets have seen pretty remarkable inflows into gold ETFs as well. So it seems to be a relatively universal story this year.
And then so then this kind of goes back to gold is usually used to as a diversification of your asset holdings with the bonds and equities. And as it becomes more of a financial instrument, does it sort of mess up your gold as a hedge trade?
That's definitely an interesting observation because it's something that we're trying to get a little bit more data on. There's been so much activity in gold investment this year that it has sort of compressed the percent of gold jewelry being demanded. I mentioned jewelry was 33%, for instance, but in years past it was closer to 40%. And that changing dynamic in the gold market is something we're trying to track. But I would say that investors who invest in gold are seeking gold as a hedge, and therefore they're trying to use those hedge qualities as a way to protect against certain downside risks in a portfolio. And certainly gold's financial performance has shown that it's still a very, very good hedge for extreme events, when there's major disruptions in trade, for instance, or when then, the day that Russia invaded Ukraine, the gold price went up. It performed like you expect it to perform. So I think that value, that characteristic for gold is still there.
And then if we hone into the last part on central banks, you started to allude to this as well. So now with whether it's Trump related or US interest rate policy related, with dollar losing its value, gold becomes more attractive. Is that what you're seeing with the central bankers and their trend in buying more gold?
So this is definitely coming from a bit of bias because this is the part of the gold market that I personally focus on the most as the global head of central banks. I'd say central banks are buying gold for their reserves for a number of different reasons. Of course, the geopolitical reason is very important among them because we have seen a very big boom in central bank gold buying since 2022, since the invasion of Ukraine by Russia, and more specifically since the enactment of sanctions or the freezing of Russia's foreign exchange reserves by the West. I think that was a bit of a wake up call to some central banks around the world who now are reevaluating the nature of political risk in their reserve portfolios. So that certainly has been a common theme or narrative among some central banks, but it's not the only reason that central banks are buying gold. The biggest single central bank gold buyer year to date is actually Poland. not China or any of the other BRICS countries, for instance. And Poland, I think, is seeing the the value of gold as a geopolitical hedge, as a way to bring a little bit more resilience into their portfolio because of the geopolitical challenges in the neighborhood that they live in, of course.
And then if we again go into the Asian central banks, my first question is: it China buying that's pushing this up?
So certainly China Central Bank, the PBOC, has been buying quite a bit of gold as well, but they're not the largest buyer. I think they're either fourth or fifth in terms of largest central bank buyer year to date. But they are a large buyer, of course, so that's been having an impact on the gold market. Besides China itself, we saw Indonesia buy a little bit of gold. The Indonesian central bank, I should say, buy a little bit of gold in the last few months. A couple of years ago, Thailand was a big buyer. Singapore was also a big buyer a couple of years ago. So within the Asia Pacific region, I do see a lot of central banks still adding more gold to their reserve portfolios.
And if we add more color, like, but it's not a significant amount that they're buying, that they're trying to reduce the dollar reserves to be less than the majority of their holdings.
Specifically for China, they have been buying a couple of tons of gold every month now for the past several months or so. And it is a bit of on and off buying. They are active for a bit of a streak of time and then they stop and then they reactivate again. We don't know exactly how much gold central banks are buying. The World Gold Council actually produces two sets of data. So when you see country level data, that's based on the official published statistics of these central banks, what they report to the IMF. But the World Gold Council also estimates how much gold in total the official sector is buying. And according to our estimates, central banks are actually buying double or even more than what they've been officially reporting. Now, we don't know exactly where this buying is coming from. Some of it might be coming from sovereign wealth funds, for instance, that don't disclose their investment activities. Or some of it might be coming from central banks who are purposely either not disclosing or maybe buying through other vehicles. But we do think the official sector is buying quite a bit of gold, and that's having a discernible impact on the gold market.
And then, how do you sort of differentiate like what is like a structural long-term diversification away from the dollar or geopolitics, and then maybe like short-term that just because we think the Federal Reserve is going to cut a bunch of times, dollar's going to get weaker, so it's better to buy gold.
I think for the central bank buyers, they are inherently long term investors. So they're probably not looking at a specific rate cut cycle for their decision on whether or not to buy gold. They typically tend to view gold as a separate and distinct strategic asset within their reserve portfolio. And if they choose to accumulate, it's probably to hold on to the gold for a longer period. For institutional investors, private sector investors, of course, more of them might be driven by more short-term factors like interest rates. I think, relatively common behavior among, let's say, hedge funds, for instance. But we do think that overall, we're seeing a lot more strategic allocation to gold across many different types of investors. A recent major bank in the US, for instance, has called for a 60-20-20 portfolio, 60% equity, 20% bonds, 20% gold, versus the traditional 60-40 equity bonds portfolio. And as we navigate what seems to be a period of political, economic, financial uncertainty, as different political structures and economic structures in the world start to either realign or fragment, I think a lot of investors are turning to gold to be able to bring a little bit more stability and resilience in their portfolios throughout this uncertain period of history.
It's interesting you said this 60-20-20. Is that a little bit of the trend where they'd rather reduce the bond holdings and not the or the reduce the equity holdings and not the bond holdings to
Well,
diversify
I
the
mean,
gold part?
if you follow that bank's advice, then it would be reducing bond holdings in favor of
Yeah.
gold.
Hmm.
I mean, one narrative that we saw emerging earlier this year was whether the U.S. Treasury market was still the safe haven of choice, given the wobbles we saw in the market, given worries about U.S. debt sustainability, of course, the recent U.S. government shutdown as well, and just the general uncertainty around U.S. policymaking these days. And that might trigger some investors to think about alternatives for safe haven assets, with gold typically being a commonly thought of alternative.
Okay. And so then once we kind of get to the investor thing, since markets are moving quite a bit, I've got to ask, like, do people put like Bitcoin and gold together and uh, think about how they should invest in one or the other.
I think in Bitcoin's earlier days, in its infancy, there was a lot more chatter about whether Bitcoin is digital gold, whether it will replace gold. But I think that as we've moved on and as both asset classes have evolved, that narrative is not quite as strong anymore because there is a place for both cryptocurrencies and gold as separate and distinct asset classes. Their financial behaviors are actually not that similar. The similarities they share are somewhat superficial, limited in quantity, often seen as an alternative to fiat currency. But beyond that, if you look at how they perform as asset classes, the behavior is very different. Cryptocurrencies are much more skewed toward risk, for instance. They're much more correlated to risk assets. Gold traditionally has very low correlation to many other asset classes, making a very good diversifier. So, although there are some superficial similarities, I think the case for holding both as distinct asset classes is now a lot more cemented.
Another thing, when I was trying to do some research on your website, I noticed that to log in, of course, everybody can use like a Google login, but I see that you can use a WeChat account to log in. Is that kind of where the interest is? Is in from
Well,
Chinese
China is the largest
investors?
gold
Yes.
consumer market, so certainly we need to provide information and data for a Chinese speaking and reading audience and using preferred tools that they use in China. But the information we provide is available for anyone, anywhere. Anyone who's interested in gold can visit goldhub.com or gold.org to find out information about gold.
Is that something you guys started recently, or it's been around for a while? The WeChat login.
I don't know when we added that feature, but since China has been the largest consumer market for gold for well over a decade now, I think we might have added that quite a bit, quite a long time ago.
We always talk about, you mentioned a bit before that, okay, maybe US can use dollar as a weapon, so that's why you might want to hold gold as a hedge. And I mentioned to you earlier that everybody knows about the Bank of England vault, or maybe the Fed when they're watching movies of heists. But are people holding gold in other areas so that they don't get worried about Trump uh, not letting that gold loose?
So the vaults you mentioned, the Bank of England, the New York Fed, those are vaults primarily for official sector gold holders, so foreign central banks. So ordinary people like you and me, we can't keep our gold at the Bank of England, unfortunately.
Oh
But
man.
the Bank of England is still the most popular location for central banks to store gold. We do an annual survey of central banks, and that is one of the questions we ask. The New York Fed is still a popular place as well. There's actually more gold in New York than there is at the Bank of England, but there, I think, are more central banks who store gold at the Bank of England overall. They're both very popular, and there are a few other official sector service providers as well, like the Banque de France, Swiss National Bank, Bank of Canada, etc. But in the past few years, we have seen a trend of central banks repatriating their gold, bringing gold away from London, away from New York, back to the home country, or diversifying gold into different storage locations around the world as a way to mitigate some of the political risk and exposure that they might face. So I think that that is an ongoing trend. Our own survey results show it, and of course, in terms of what's public, the Reserve Bank of India has moved a bit of its gold from London back to India recently, and we know of several other central banks that are thinking of doing so as well.
Is there an Asian central bank that's kind of holding it for other Asian central banks?
Right now, there's no official sector Asian central bank providing these services, but recently we saw that China was promoting the storage of foreign central bank gold in China. And further news stories said that Cambodia might be taking up that offer. I don't think we've seen anything official come out from either the People's Bank of China or the National Bank of Cambodia. But we are seeing China basically thinking about offering gold storage services to foreign sovereign gold holders as well. Away from China, there are other centers in Asia that I think are exploring this idea as well. And I think that there is an opportunity here because so much of the activity in the gold market is actually in this region. So it makes sense for there to be more gold storage in this region as well.
Yeah, Shaokai, before we talked, he said that there's one thing I can't answer is the gold price forecast. But I can ask you the question, and I think you have an alternative answer. So, can you give me your gold price forecast?
I'd love to be able to give that to you, but unfortunately, we're not allowed to forecast the gold price at the World Gold Council. What we can do instead is to provide a tool which is available on our website, goldhub.com. called Quorum, Quarum, and that is a model that can help you forecast the future gold price based on various macroeconomic inputs that you can input yourself. There are some preloaded scenarios in there that come from a third party company as well, but you're free to input whatever you think the future of money supply or whatever other factors are part of the model into there, and that can produce a forecasted future gold price based on your opinion.
Yeah, I think that your website has tons of stuff about gold that you can catch up on. And for our podcast listeners, there's a is it monthly? It's called Unearthed podcast that you guys produced.
Yes, the World Gold Council has its own podcast called Unearthed, hosted by my two colleagues. It is a monthly podcast.
So Shakai, just to get personal again, how much gold do you have at your house?
Actually, not that much. But that's not because I don't believe in gold, of course, I do. But it's more like I tend to buy gold ETFs. So they are physically backed by gold, but the gold is not in my house. I live, like you, in a very safe country, so I'm actually perfectly fine keeping more gold in my house, but I tend to go with gold ETFs.
Yeah, I guess it's hard to move when you have to when your lease is up.
That's true.
So Shaka, is there anything else that you wanted to mention that I may have missed?
I think it's always important for anybody who's considering investing in gold to understand the impact of gold in a portfolio. If you're looking to invest in gold purely to make money and you're hoping for it to go up, 50, 60% like it's gone up this year, it's not always going to be this way. But the value that we see for gold is that it is a diversifier and it can also help to improve risk adjusted returns in most portfolios. So look at it as an ingredient within a larger mix of assets in your portfolio. See if it improves the overall performance of the portfolio and make a decision on gold based on that. If you're just chasing returns, then it's not always going to be like this year.
Yeah, I think it's a very good advice as it gets talked about with price going up so much and it becomes more of a hype. But overall, I guess you guys think it's a very good asset to have in your portfolio based on your direction or savings plan that you have.
Absolutely.
Okay, very good. We can go on forever, but in the interest of time, I want to just kind of wrap this up here. Shaokai, thank you very much for your time. I hope you can come back and join us at a later time for part two.
Anytime. Thank you.
And thank you everyone for listening to Inside Asia. Speak to you soon.